Hey everybody, Steve Ankerstar here, and welcome to the Ankerstar Wealth Morning Brief. Ali is out all week with finals. Today we're going to talk about three things. We're going to talk about the December sell-off. We're going to talk about the annual gift tax exclusion. In other words, how much you can give away each year without triggering any tax consequences. And then we're going to talk an IRS Form 709, which is the form you would use if you did trigger past that, annual exclusion, which is 16,000 this year. You simply fill out that form, and then that becomes part of your estate later on. Before we begin, as a reminder, this is a financial education presentation, should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Now let's get started with what's going on in the market today. Again, I made this after the market close on Monday. So the market sold off pretty hard today, almost 1.5%, 2% across the board, sharing out CNBC to you right now. There it is again after the market close here today. So it's instructive to think about what's going on. So big picture, there's inflation out there. This has been the theme of 2022. There's inflation that needs to roll over and break and come down significantly. The Fed needs to stop raising rates, 75 basis points at a crack. And the Russia-Ukraine situation needs to at least work towards start trending towards being solved, not necessarily solved. So what do we have? Well, no real movement on the Russia-Ukraine front. But as far as when you look at the CPI and inflation, remember that's a 12-month moving average. So it's going to take a while for some of the bigger numbers to move out of the equation, if you will. So be patient. It's coming down. It's not coming down as fast as everybody hopes, but you know what? It just takes time. So that's actually a good news stories for the market, and that parlays right to the Federal Reserve and what Chairman Powell said last week during his speech that caused the market to scream higher was that the Fed's always going to say they're data dependent and blah, 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 right? Because that's what they should be, and that's what they should say every time. However, this Fed has been particularly good at forecasting exactly what they're going to do. And he's basically saying, in using words, not numbers, that it's going to be a 50 basis point rate hike, which is good news. The good news of it not being 75 anymore outweighs the bad news of that it's still going up. So if you think of it as a flight path or a profile, we just had 4 in a row, 75 basis point moves. If we go 50, 25 and hold, that would be fantastic. So next Wednesday, a little over a week from today, is when you would see, the 50 basis point rate hike. I think that's pretty much going to happen no matter what data comes out between now and then. Then in January, you're going to set, this should be the end of January, you would see that 25 basis point rate hike. And then if the Fed just pauses at that point in time, the market now has a footing to go higher. So all of that is good news. What is going on today? Why is there negativity? Well, the lack of trust of people out there that the Chairman Powell and the Fed are actually going to do what they say they're going to do, which is that 50% basis point rate hike. So a lot of it is just repositioning, maybe a little tax loss harvesting, which means selling, and taking advantage of that 4% bump we had midweek last week. Or it's just a wait and see mentality of who's going to buy here when you could wait 9 days and buy, potentially cheaper. I think now is the time to buy. I think you'd want to position ahead of that Fed move. So that's what you're going to hear me say throughout this week and then early in the next week, is I think it's time to start looking, not getting crazy, start looking at rewickering a little bit more risk in the portfolios. I'd rather be earlier than late on this, because you saw the last time he spoke, it was 4% a day. Right? That's like half of a normal annual return in a day. So that's how fast these things switch. I do want to show you one thing that's off of the presented to by First Trust here is the annual returns to date. This is as of this morning. This is an eye chart. I'm not really asking you to really take a look at a lot of stuff here, but I do want to just say this is, you might have to pause, or I'm going to try to zoom in here a little bit, see what I can work with. But yeah, you have the, S&P is that top line. It's down 13% year to date, but we've had a bounce. We really have. It doesn't feel like it because, 2022 sucks. I got that. And we're down for the year. But when you look at, it in 3 months, it's up 4%, 1 month up 8%, in a week, still up 1% after that big move earlier. So it feels a lot more negative than it actually is. And you're like, okay, well, let's talk NASDAQ, since there's Dow and NASDAQ. Dow's the top line, almost to even for the year, for the more value type, investments, almost back to even, where the NASDAQ, tech is still in a house of pain. 26% down for the year. But when you look at 1 week at 2%, 1 month at 9%, still negative for, the 3-month look. But really, when you zoom out, and this is where it's going to switch. Is my point, is that right now value is winning, absolutely. But when it switches hard. If you go over to this right year, 10-year plus column or the 5-year plus, either one, S&P 500's at 13% over the past 10 plus years. The Dow's at 12.8, but Nasdaq's at 15.6. So my point being is it's going to come back, and when it comes back, it's going to come back significantly and again take the lead. So if you look historically at the markets, you have tech, outpacing everybody, and then it has these hard resets, right? 2000, 2008, 2020. Well, COVID was an outside influence that caused it, but still during COVID, the sell-off, the tech sold off harder, right? So during sell-offs, which we have, during bear markets, which we have, and we'll have more, tech is going to hit harder, but it also comes back the fastest. So be patient. You don't want to be bailing now 11 months into this thing. So stick with the game plan. All right, that's all I'm going to talk about our sell-off. I honestly think overall December is going to end up a green month. I really do. I think the rates of the Fed's going to be true to their word, and I think the market's going to start creeping higher. Not huge. It's not going to be crazy, but I think it's going to start creeping higher. All right, let's talk about giving away money. Everybody's favorite topic, right? If you have money, a lot of it, it's nice to give it away. This is the IRS seriously.gov webpage, so there is no more accurate information that's out there. But you can give up to $16,000 away each year. So if you do it at December 31st, January 1st is a new year, you could do 32,000. It's actually going to 17,000 next year. So 16,000 this year, 17,000 next year. Now, this doesn't really count, food and clothing that you provide your children. That's all wrapped into raising kids. This is when you give an outright gift, right? And a lot of people don't come across this till they actually buy a car, and it's over these amounts. Well, you can buy the car, but if you keep it in your name, it's not a gift, right? It's really your car. You're just letting, you may tell your kids it's their car, but on paper, you're on the deed there. So this is when you actually put things in their name, or, say they go out into the world, fall in love, and you want to buy them their first house. Well, if it's in your name, it's not a gift. If it's in their name and you gifted them the sum or all of the down payment, then yeah, you would be running into having to look at this. So who pays it? It's you, the one with the money pays it. What's considered a gift? You can, it's basically directly or indirectly the amount of money or the money's worth, where there's no expectation of a return, right? They're not doing anything for you. You're just seriously giving it to them. What can be excluded? Really tuition and medical expenses are the big ones here. If somebody has a tuition, now we're not talking 529s, we're talking literally, my daughter's at Alabama. If you're, if anybody out there, please let me know, wants to stroke a check directly up to Alabama, there's no limit, right? You could gift all you want for tuition or medical expenses. Actually, let me give you my Venmo. I'm just kidding. But as much as you want, it doesn't count for that. So if somebody comes into trying to better themselves through education or runs into trouble with medical expenses, you as much as you want. Obviously gifts to your spouse, that's considered one entity. So it goes back and forth. And then some political organizations. So you'd have to look that one up on your own on what's that considered. Can I deduct them on the income tax return? Generally, no, unless it's a charitable deduction. So, and there's rules with that. So not a CPA, do your own due diligence there. Okay. How many annual exclusions are available? Well, one each year. And then there's the amount. So it's 16,000 for the remainder of 2022. And then in 2023, that jumps to 17,000. Again, that's tied to the CPIW, the same one that raises Social Security and everything else out there. So tax brackets move up, everything moves up, right? With the big CPI number we got this year. So that spouse and you want to gift together, yes, you both can. That's an individual exclusion. So if you have one child and you both want to give money, you can go up to 32,000 this year. Wait a few days till the January, then you can do 34,000 next year. So you could gift away up to 70K without having to do anything. So most people aren't really into that position where they're giving that much money away, but it's also, in the big picture, there's times when you are changing that amount of money between hands. So, and it doesn't just have to go to kids. It could be, the interesting ones are like child stars and stuff where they make the money and the money's theirs and they're trying to get money to their parents and, they can't, right? And the parents have spent all this money trying to, get them to that point. But you're, just realize what you're doing. Sometimes when you're transferring money, you could be gifting, and then you need to think of, am I exceeding these limits? So what happens, Steve, if I do exceed the limits? Well, you fill out a form is all. Literally, you're not paying any taxes today. So say it's your child wants to buy a house and the down payment is 50,000. And well, let's just go 100,000. I know that's a little high for down payment, but whatever, it is what it is. So say it's 100,000 and you and your spouse want to do both help out. So you can do 16 times 2 this year and then wait till January 1st and then do 17 times 2, so 34. So together again, that'd be the 70,000 if my math is right. To be able to gift that away, but say you just want to gift the whole 100, right? Well, you fill out this form, and this form identifies the amount beyond what you're allowed to give. So if you give 100K and then you fill this out and you're filing jointly, you would explain on here, okay, well, we gave 16K each, that's 32, and the rest we gave in this year is 68. So now that amount goes towards your estate later on. So basically, you're using your estate tax credit, how much you can transfer before having to pay any taxes when you pass away, which is over 12 million now, and it's going to almost 13 million. But that's a moving target sometimes. But anyhow, this simply goes with your taxes. You're eating into that credit later on. So if you would pass away above that amount, you would have to subtract out what you gave away above the annual gift tax in 2022. Away from that. So again, not a CPA, consult your CPA, not tax advice. I'm just telling you generically how this process works. So people are like, okay, well, I'm not really planning on having $13 million when I pass away. So I'm going to speed all over this because I'm never going to see it. And I don't care because I'll be dead. Or if it's a couple, the last person to pass, it's like, I don't care because it's later on. Well, where this can get you is, an administration change or whatever. Somebody else can write into law that the estate tax when you pass away is $1 million. So if you've given away a bunch of money thinking, okay, well, it's never going to be an issue. Somebody changes that and brings it back to $1 million where it was for a number of years. That could cause you tax problems. Again, you're dead at that point, but you could cause your family tax problems at that point. So anyhow, something, just know that it exists. So if you do give money past that, it's not that you can't. You can. You just have to fill out this form, and then it could have some implications later on or not. So that's all I have for today. Thank you so much for these questions. Please continue to submit your questions, either email or through our website. Don't forget to like and subscribe. That's all we have for today's show, and we will see you back in the morning. Bye.